Stefan, it's great to see you. So top level, what's your idea here with software? It's going to hold up better than feared?
Yeah, hi, Kelly. Thanks for having me on the show. And yeah, you're right. We published our BNP Paribas 2025 outlook for software and AI a couple of weeks ago. And we've been discussing with investors, institutional investors across Europe and the U.S. And investors are looking for software ideas for next year. The sector really bottomed back in May with kind of peak pessimism around demand, around Gen AI, disappointment in the products, and around potential disruption. But we've seen a lot of that reverse with more optimism around demand picking up, with more optimism around AI agents kind of taking over for co-pilots as a killer app for Gen AI. And we've seen that in the sector rallying over the past 6 months.
So, Stefan, just because I can be slow on the tech stuff, connect the dots to me. So you think the emergence of AI agents is actually making software look like it will hold up better than it might have otherwise?
Yeah, I think when you look at last year, so about 12, 18 months ago, when we kind of had the peak hype and excitement around Gen AI, co-pilots were the product that a lot of the software companies were developing. I think a lot of CEOs didn't see the full value there. They saw maybe some efficiency improvement for their staff. But now with AI agents, look, this is really about automating tasks. It's about automating jobs. And so I think CEOs and CFOs are seeing value in these AI agents. We're seeing platforms from Microsoft, platforms from Salesforce coming out. And I think you're seeing a lot of interest amongst customers in adopting these platforms, adopting these AI agents in order to drive automation, to drive efficiency. And that's where the hope is that this comes through next year.
You can see the lift. I mean, year to date, the XSW is now up 30%, and a lot of that has been the past couple of weeks. So I don't know if you can get specific on Salesforce tonight, but what are you expecting?
Yeah, so you're absolutely right. The IGV software ETF has doubled off the beginning of 2023. And so a lot of these stocks are looking more expensive. So you really do need to believe in revenue growth acceleration for next year. And so when we look at Salesforce, it's one of the companies that in the back half of next year, we could see revenue growth accelerate. Microsoft as well. Microsoft Azure should accelerate in the front half of next year. We think Microsoft Office Commercial could accelerate as Copilot drives demand for them. And even Oracle, SAP, these companies have been performing well, but you're still seeing revenue growth acceleration. So with valuations having become a bit more elevated, the market's either pricing in demand recovery or Gen AI success. So we still think you need to be picky around stocks and pick those stocks that you think can drive revenue growth acceleration next year.
Do you have data points on the Microsoft one where, from what I've heard, this might be a few months old still, there wasn't a big take-up of Copilot. There wasn't really this, sense of excitement around the ROI and the corporate workforce, but perhaps you see that changing.
Yeah, absolutely. We're more bullish in the market on Copilot. We talked to a lot of the resellers that we cover. We think that they could already be at near 10 million seats of Copilot sold by the end of this calendar year, which is above consensus expectations for 7 or 8 million. So we're already talking about multi-billion-dollar contribution from Copilot. When you add that to Microsoft Azure, this is a company that's going to be generating a run rate of $10 billion as of this quarter in AI and Gen AI. And we think we start to see more visibility on those data points next year as the company discloses that. So I think, next year we're going to see kind of software take that growth baton from hardware on the AI front, and Microsoft, Salesforce, these are companies that will be those flag bearers.
That would be fascinating. You're more cautious on Adobe and ServiceNow. Are those kind of idiosyncratic stories?
Yeah, so for Adobe, we downgraded beginning of this year. And look, Gen AI is going to be disrupting a lot of software segments. We think Adobe's is one of them in the content creation and editing space. And you're seeing the hyperscalers come rushing in there. We think they want to collapse the cost of creating content so that advertisers shift that spend into digital advertising. And so we just think Adobe's market becomes a bit more competitive. And for ServiceNow, we're neutral. But obviously, you have 15, 20% of revenues coming from government spend. And next year, we think you want to be more in the enterprise than in federal with the Department of Government Efficiency in the U.S., political uncertainty in Germany, France, and the U.K. And so we're a little bit more cautious there with valuation elevated as well. Maybe
a great way to put that would be, sort of the stock to, I hate to use the term go short, but on Doge and on global disruption would make a player like that dependent on those federal contracts perhaps more at risk. That's really interesting. Just a final comment then. Snowflake, they've been in the news lately because of some of these cyber security issues. You still think that's a high growth story?
Yeah, absolutely. So we upgraded Snowflake and Shopify both earlier this year as we kind of went down the risk curve a little bit, looking for some of those high growth names that have been out of favor the last couple of years as we've been in this higher rate environment. We've seen both of those stocks see growth stabilize in the high 20s. We think they continue to stay there. We think they've got new products emerging. With Snowflake, they have some new AI products as well. And there's even potential for revenue growth acceleration next year. So those are two of the sort of higher growth, lower profitability end of the software spectrum. But we still like those two names.
Well, from top to bottom, I like the playbook. Stefan, thanks for joining us to explain it. Really appreciate your time.
Thanks, Kelly.
Stefan Slowinski of BNP Paribas Exane.